Ladies and gentlemen, we are entering the final countdown. It is January 5th, 2026, 14:37 Eastern Time. Exactly 52 hours since Nicolás Maduro, the president of Venezuela, a nation sitting atop the world's largest proven oil reserves, was captured by United States Delta Force operatives in a military operation codenamed Absolute Resolve. 52 hours since the rules changed. 52 hours since a sovereign nation's leader was extracted from his compound in Caracas and flown to a detention center in Brooklyn, New York. And in those 52 hours, we have witnessed something extraordinary. We are watching, in real time, the bifurcation, the splitting of reality itself. On one side, you have the official narrative, the one being sold to you by mainstream financial media. Minimal impact. Venezuela too small to matter. Oil prices barely moved. On the other side, the side I'm going to show you today, you have the mathematical inevitability of what happens when a nation that controls 303 billion barrels of proven oil reserves suddenly fractures. When $150 billion in sovereign debt, defaulted, distressed, and dormant for years, suddenly comes roaring back to life. When the world's second largest creditor nation, China, watches 2/3 of Venezuela's 900,000 daily barrel exports potentially slip from its grasp. This is not a story about regime change. This is not a story about democracy versus dictatorship. This is a story about the largest forced wealth transfer in modern Latin American history. And it's happening right now. Not tomorrow. Not next week. Right now. My name is your name, known to many of you as your channel name. And I am here to walk you through the three shock waves, economic, geopolitical, and financial, that are radiating outward from Caracas at this very moment. Shock waves that will determine who becomes wealthy beyond measure and who loses everything. The fracture has occurred. The bridge between the old Venezuela and the new Venezuela has been burned. There is no going back. Let me show you what most analysts refuse to see. Let me show you the mathematics of collapse and the mathematics of opportunity. Let me show you the three battlegrounds where this war for Venezuela's future and your financial future will be decided in the next 36 hours. Because when court opens in Manhattan at noon tomorrow, Maduro will make his first appearance before a federal judge. And when that gavel comes down, the race will officially begin. The race to claim Venezuela's oil. The race to collect on $150 billion in debt. The race to control the energy future of the Western Hemisphere. The countdown is ticking. Let's begin. Here's what they're telling you. Oil prices barely reacted, up only 1%. Venezuela is too small to matter. Here's what the mathematics actually shows. Venezuela currently produces approximately 900,000 barrels per day. That's the number on your screen. 900,000, burned into the trading algorithms, priced into every futures contract. But that number is a lie. Not because it's inaccurate. It's technically correct for December 2025, but because it represents the endpoint of a catastrophic collapse. Let me show you the trajectory. In 2013, Venezuela produced 2.9 million barrels per day. Write that number down. 2.9 million. By 2018, during the peak crisis under Maduro, production had fallen to 1.5 million. By late 2025, it crawled to 900,000. Let's do the math together. 2.9 million minus 900,000 equals 2 million barrels per day. Gone. Evaporated. That's a 69% decline in Venezuela's primary, not secondary, primary revenue source. Now here's where it gets interesting. Where did those 2 million barrels go? They didn't go to a competitor. They didn't go to Saudi Arabia or Russia. They simply ceased to exist. They represent the mathematical destruction of human and physical capital. When you expropriate supply chains, when you fire 25,000 experienced oil engineers from PDVSA, Venezuela State Oil Company, when you let refineries rot for 50 years without maintenance, production doesn't just fall. It collapses. But here's the paradox. Here's what makes this moment so explosive. Every major investment bank, JP Morgan, Goldman Sachs, the analysts at Saxo Bank, they're all publishing the same forecast. They say Venezuela could double or triple production within 2 to 5 years if political transition is smooth. JP Morgan specifically projects 1.3 to 1.4 million barrels per day within 2 years. With major investment and institutional reform, 2.5 million barrels per day over the next decade. Some analysts go even further, 3 million barrels in the medium term if sanctions lift and Western capital floods in. Let me repeat those numbers so you understand the magnitude. Current production, 900,000 barrels per day. 2-year projection, 1.4 million barrels per day. 10-year projection, 2.5 to 3 million barrels per day. That's an increase of 1.6 to 2.1 million barrels per day coming online. Now let's talk about what that means for price. Bloomberg analysts, citing energy experts, project that if United States capital and technology successfully increase Venezuelan output, global oil prices could fall by 4%. 4%. That sounds small, doesn't it? 4%. Oil is trading around $73 per barrel today. 4% of $73 is roughly $2.92. So we're talking about oil potentially falling to $70. But here's what they're not telling you. A 4% global price decline triggered by one country ramping up production is enormous. It represents a fundamental shift in supply dynamics. Because Venezuela isn't adding 50,000 or 100,000 barrels, numbers that get absorbed by daily market noise. We're talking about 1.5 to 2 million barrels flooding a market that's already in surplus. Ole Hansen, head of commodity strategy at Saxo Bank, said it plainly. There's an ongoing surplus from months of increased production, which continues to fuel the narrative of an oversupplied market extending into 2026 and potentially beyond. Translation: the oil market was already drowning in supply. Now you're about to dump millions more barrels into it. But wait, before you rush out and short oil futures, let me show you the other side of this equation. The side that turns the oil price crash narrative into a lie. Because there's a problem. A massive, multi-decade, $110 billion problem. Venezuela's oil infrastructure is dead. I don't mean underperforming. I don't mean need some investment. I mean dead, rotted from the inside out. PDV, the Venezuelan state-owned oil and gas company, has publicly stated that its pipelines have not been refurbished in 50 years. 50 years. Think about that. The last time significant maintenance was done on Venezuela's oil pipeline network, Richard Nixon was president. The Vietnam War was still raging. The internet didn't exist. And those pipelines are just the beginning. Refineries are operating at a fraction of capacity. The skilled workforce, engineers, geologists, rig operators, fled the country years ago, part of the 7.7 million Venezuelans who migrated out, representing 25% of the country's population. You can't just flip a switch and bring 2 million barrels per day online when your entire system has been gutted. So how much will it cost to rebuild? The estimates range from $58 billion to over $110 billion in capital investment. Let me give you the conservative number first, $58 billion. That's what PDV itself estimates to restore infrastructure to peak production levels. But The Guardian and other analysts put the real figure closer to $110 billion, and they say it will take more than a decade, stretching into the early 2030s, before Venezuela can realistically hit those 2.5 to 3 million barrel per day targets. More than a decade. So here's the real paradox. Oil markets are pricing in a supply surge that mathematically cannot happen for 10 years. Traders see regime change and United States control and assume production will magically double overnight. But the mathematics say otherwise. The engineering says otherwise. The capital requirements say otherwise. Venezuela's oil revival requires two things in enormous quantities: time and money. And guess what? Neither is guaranteed. Now let me take you to the third shockwave, the one that's going to determine whether this story ends in global cooperation or a new Cold War. China. Venezuela exports approximately 900,000 barrels of oil per day. 2/3 of that, roughly 600,000 barrels per day, goes to China. Why? Because China is Venezuela's largest creditor. According to multiple sources, Venezuela owes China approximately $10 billion. And how has Venezuela been paying it back? Through oil, crude for debt swaps, barrels instead of cash. This arrangement worked beautifully for Beijing. They lent money to Chavez and Maduro when no one else would. They got repaid in oil at favorable prices. And they secured energy supply chains outside of United States control. But on January 3rd, that arrangement shattered. Because now, the United States, through military force, has inserted itself into the center of Venezuela's oil equation. President Trump has explicitly stated that the United States is taking control of Venezuela's oil reserves. Think about what that means for Beijing. 600,000 barrels per day. Gone. Or at least severely threatened. China cannot simply walk away from Venezuela. They have $10 billion on the line. They have energy security on the line. And most importantly, they have prestige on the line. If the United States successfully wrestles control of Venezuelan oil and redirects those exports to Western markets, China doesn't just lose money. They lose face. They lose influence in Latin America, a region where they've spent 2 decades building belt and road infrastructure, lending billions, and positioning themselves as the alternative to American hegemony. Some analysts are already warning. If the United States tightens control over Venezuela's oil exports post-takeover, escalating United States-China tensions could negatively impact the global economy. This is not hyperbole. This is game theory. China will not sit idly by and watch $10 billion in debt vanish and 600,000 barrels per day of oil supply disappear into United States hands. They will push back. The question is, how? Now let me take you into the deepest, darkest, most dangerous layer of this crisis. The layer that almost no one is talking about, but which represents the single largest financial opportunity and threat of the next decade. Venezuela's debt. Let me start with a number, $150 billion. That's the conservative estimate of Venezuela's total sovereign debt. I say conservative because Venezuela hasn't published accurate debt statistics in years, so the real number could be higher, much higher. But let's work with $150 billion. Let's walk through who holds this debt, what it's worth today, and what happens when a new government comes to power and creditors start circling like vultures. The largest chunk of Venezuela's debt, probably $60 to $80 billion, is held by international bondholders. These are hedge funds, distressed debt specialists, pension funds, and what the financial world politely calls vulture funds. These bonds are currently trading at pennies on the dollar. Why? Because Venezuela defaulted on its sovereign debt years ago. Maduro stopped paying. The bonds became worthless paper, or so everyone thought. But defaulted debt doesn't just disappear. It sits there waiting, and the investors who bought it, they bought it for one reason. They were betting that someday, somehow, a new government would come to power and restructure the debt. Pay back 20 cents, 30 cents, maybe even 50 cents on the dollar. Well, someday just arrived. Reuters reported on January 4th. The market is swept up in optimism regarding Venezuelan bonds, anticipating a massive bonanza. Translation: vulture funds are salivating. Because if a new government backed by United States support, flush with promises of oil revenue, restructures that debt and offers even 30 cents on the dollar, we're talking about a payout in the tens of billions. Let me do the math for you. If bondholders are owed $70 billion in principal plus accumulated interest, and they get restructured at 30 cents on the dollar, that's $21 billion changing hands. $21 billion flowing from Venezuela's future oil revenues into the pockets of distressed debt investors. That's not a recovery. That's a heist. But the bondholders are just one group. There's another category of creditors that's even more dangerous. The companies with international arbitration awards. These are corporations, mostly American and Canadian, whose assets were expropriated by Chavez and Maduro during the socialist wave of nationalizations in the 2000s and 2010s. The two biggest names, ConocoPhillips and Crystalex. ConocoPhillips, one of the largest oil companies in the world, had major oil projects in Venezuela. The government seized them. ConocoPhillips sued in international court, and they won. The arbitration tribunal awarded them billions of dollars in compensation. Crystalex, a Canadian mining company, had a massive gold mining concession. Venezuela nationalized it. Crystalex sued. They won. Multi-billion-dollar award. Here's the thing about arbitration awards. They're not suggestions. They're legally binding debt obligations. Venezuela owes this money. And unlike bondholders who might negotiate a haircut, arbitration winners have the full force of international law behind them. They can go after Venezuelan assets anywhere in the world, oil shipments, bank accounts, even the gold sitting in vaults. ConocoPhillips has already seized Venezuelan oil cargoes in the past to collect on its judgment. Now, with a potential new government coming in, they're going to demand full payment. We're talking about $8 billion to $12 billion just between ConocoPhillips and Crystalex alone. Add in the other companies, there are dozens, and you're looking at another $15 to $20 billion in arbitration-related claims. Now let's talk about the elephant in the room, China and Russia. These aren't bondholders. These aren't arbitration winners. These are sovereign nations who lent billions, possibly tens of billions, to Venezuela under bilateral loan agreements. China, as I mentioned, is owed at least $10 billion. Russia's exposure is harder to quantify, but estimates range from $5 billion to $15 billion. Both countries structured their loans as oil-for-debt swaps. Venezuela pays them back in barrels, not dollars. But here's the nightmare scenario for Beijing and Moscow. What if the new Venezuelan government, backed by Washington, simply refuses to honor those loans? What if they say, those were corrupt deals made with a criminal regime? We don't recognize them? International law gets murky here. Sovereign debt restructuring is complicated, and when geopolitics is involved, legality often takes a back seat to power. If the United States gains control over Venezuela's oil production and export infrastructure, they control the cash flow. And if they control the cash flow, they control who gets paid. China and Russia could find themselves holding $20 billion to $25 billion in worthless IOUs. That's not just an economic loss. That's a geopolitical humiliation. Now let's put all these pieces together and talk about what happens next. A formal debt restructuring is coming. It has to. Venezuela cannot function as a modern economy while drowning in $150 billion of defaulted debt. But here's the problem. There are too many creditors, too many competing claims, too much legal chaos. You've got bondholders who want 30 cents on the dollar. You've got arbitration winners who want 100 cents on the dollar. You've got China demanding oil shipments to repay $10 billion. You've got Russia demanding the same. You've got the United States saying, we're in control now. You've got the opposition, Edmundo Gonzalez and Maria Corina Machado, saying, we won the election. We're the legitimate government. We'll decide who gets paid. And you've got the remnants of the Maduro regime, led by Vice President Delcy Rodriguez, saying, Maduro is still the president. This is a kidnapping. We're not paying anyone anything. How do you restructure debt when no one agrees who the government is? How do you restructure debt when the country's main asset, oil, requires $110 billion in investment before it can generate significant revenue? How do you restructure debt when China, Russia, and the United States are all fighting for control? The answer is, you can't. Not quickly. Not cleanly. Reuters reported on January 4th. A formal restructuring will be complicated and long due to the multitude of claims, legal actions, and political uncertainty. Translation: this is going to be a bloodbath, a decade-long legal war with hundreds of billions of dollars at stake. Before we can understand where Venezuela is going, we need to understand how it got here. Because what happened to Venezuela over the last 13 years is not just a recession. It's not just a depression. It's an economic suicide, a deliberate, policy-driven destruction of wealth on a scale that defies comprehension. Let me give you the headline number. Venezuela's economy contracted by approximately 80% of its gross domestic product. 80%. Let me say that 3 different ways so the magnitude sinks in. Venezuela lost 80 out of every $100 of economic output. The economy shrank from roughly $350 billion in 2013 to just $80 billion by 2025. 4/5 of the nation's wealth simply evaporated. To put that in perspective, this is worse than the Great Depression in the United States. It's worse than the collapse of the Soviet Union. It rivals the economic destruction seen in war-torn nations like Syria. Asia Times published a detailed forensic analysis titled Anatomy of an Economic Suicide. They break Venezuela's collapse into 3 acts. Let me walk you through each one. Act 1. Printing money to fund deficits. When Hugo Chavez came to power, and later Maduro, they made a fatal decision. They would fund massive social programs, housing, food subsidies, healthcare, not through taxes or sustainable revenue, but through money printing. This is what economists call fiscal dominance and monetization of deficits. The government needed money. Instead of raising taxes or cutting spending, they simply ordered the central bank to print it. What happened? Inflation. In 2013, inflation was already bad, 56.2%. By 2018, the peak of the crisis, inflation hit 130,060%. Let me repeat that. 130,000%. That's not a typo. That's hyperinflation. That's the bolivar, the Venezuelan currency, losing its value so fast that prices doubled every few weeks. Wages became worthless. Savings were obliterated. The entire price mechanism, the way markets signal value, collapsed. By 2025, inflation stabilized, and I use that word loosely, to somewhere between 50% and 100% annually. That's stable only by comparison to the apocalypse. But printing money was only part of the problem. The second act was even more devastating: the systematic expropriation and destruction of Venezuela's private sector. Chavez and Maduro nationalized everything: oil companies, mining companies, farms, grocery stores, factories. If it made money, the government took it. The logic was simple: private profit is exploitation. The state should own the means of production. The result was catastrophic, because when you expropriate a business, you don't just take ownership. You take responsibility. You have to run it. And governments are terrible at running businesses. Supply chains collapsed. Production fell. Shortages became chronic. Grocery stores sat empty. Hospitals ran out of medicine. Factories shut down because they couldn't get parts. The World Bank and International Monetary Fund data show that Venezuela's industrial capacity simply ceased to exist. It wasn't just that businesses became less profitable. They stopped producing. And then there's Act 3, the destruction of PDVSA, Venezuela's state oil company. Oil was supposed to be Venezuela's salvation. With 303 billion barrels of proven reserves, the largest in the world, Venezuela should have been wealthy beyond imagination. Instead, oil production collapsed by 69%. How? Maduro fired or drove out 25,000 experienced engineers and managers from PDVSA, purging anyone suspected of disloyalty. Skilled workers fled the country. Brain drain became brain hemorrhage. The company stopped investing in maintenance. Equipment broke down and wasn't replaced. Wells were drilled but never properly maintained. Refineries operated at a fraction of capacity. And here's the key point that Asia Times emphasizes: the narrative that sanctions killed the oil industry is incomplete. Data show that the collapse began well before the severe 2019 sanctions. The root cause was the systematic destruction of human and physical capital within PDVSA. In other words, Maduro destroyed Venezuela's oil industry before sanctions ever hit. The sanctions made it worse, yes, but the disease was already terminal. Now let me show you what this means in human terms. Because these aren't just statistics. They're lives destroyed. Poverty rate. In 2013, roughly 30% of Venezuelans lived in poverty. By 2025, that number is approximately 90%. 9 out of 10 people. Migration. 7.7 million Venezuelans have fled the country, 25% of the entire population. That's 1 in 4 people. The working-age population. The educated class. The doctors, engineers, teachers. Gone. Gross domestic product per capita. According to the International Monetary Fund, Venezuela's per capita GDP is now 1/5 of what it was during the 1970s oil boom. The country has regressed half a century. This is what economic suicide looks like. This is what happens when you print money to fund deficits, expropriate supply chains, and destroy your main industry through incompetence and corruption. And this is the baseline from which Venezuela must now rebuild. Now let me bring you back to the present. Because while we've been talking about history and debt and oil, the clock has been ticking. It is now 36 hours until Nicolás Maduro stands before a federal judge in Manhattan. Noon, January 6th, 2026. Southern District of New York. This is not a symbolic hearing. This is the moment when the legal machinery of the United States federal government begins to grind. And once it starts, it doesn't stop. Let me be very clear about what Maduro is facing. This isn't a political show trial. These are criminal charges that were filed back in 2020, long before his capture. The charges: narco-terrorism conspiracy, cocaine importation conspiracy, weapons-related offenses. United States Attorney General Pam Bondi has confirmed that both Maduro and his wife, Cilia Flores, who was captured alongside him, will face these charges in a superseding indictment. Narco-terrorism is not a minor charge. It's a federal statute that carries a mandatory minimum sentence of decades in prison. It's the charge the United States used to go after Manuel Noriega in Panama. It's the charge that justified an invasion. And here's the key. By charging Maduro with narco-terrorism, the United States government is essentially declaring that Venezuela under Maduro was a narco state, a criminal enterprise masquerading as a government. This has enormous implications, because if Maduro's government was illegitimate, if it was a criminal organization, then all the contracts, loans, and agreements signed by that government can potentially be voided. Think about what that means for China's $10 billion in loans. Think about what that means for Russia's oil-for-debt deals. Think about what that means for every bond, every contract, every piece of paper signed by Maduro's regime. The United States is preparing to argue. None of it is valid. None of it is binding. Because Maduro wasn't a president. He was a criminal. Some analysts and commentators are already drawing parallels between Maduro's capture and past United States interventions. The 1989 invasion of Panama to capture Manuel Noriega. Similar charges, drug trafficking. Similar justification, restoring democracy. Similar outcome, Noriega spent the rest of his life in United States prison. The 2003 invasion of Iraq to depose Saddam Hussein. Similar rhetoric, weapons, undermining stability. Similar military operation, shock, and awe bombing followed by ground forces. Similar aftermath, years of chaos and reconstruction. But there's one critical difference. Maduro is alive, in custody, and about to face trial. Noriega was tried and convicted. He died in prison. Saddam was tried by an Iraqi tribunal and executed. Maduro's fate is still being written. And that uncertainty, that legal limbo, is what's causing chaos in financial markets right now. Because as long as Maduro is alive and claiming he's still president, there are two competing governments in Venezuela. Government number one, Vice President Delcy Rodriguez, who has assumed the presidency under Venezuelan law and calls Maduro's capture a kidnapping. She says Venezuela will never again be a colony of any empire. Government number two, Edmundo Gonzalez and Maria Corina Machado, the opposition leaders who claim they won the 2024 election. They say they're ready to rebuild the nation and that the next few hours are decisive. Two governments, both claiming legitimacy, both claiming the authority to sign contracts, restructure debt, and sell oil. Which one do you do business with? Which one does China recognize? Which one does ExxonMobil negotiate with? Which one does JP Morgan lend to? This is the question that will be decided in the next 36 hours. But here's where it gets really interesting. Because there's evidence that deals were cut behind the scenes before the United States operation even happened. According to multiple reports, a circle of Venezuelan officials, centered on Delcy Rodriguez and her brother Jorge, privately outlined a roadmap for post-Maduro Venezuela. The deal: Rodriguez would act as figurehead, while exiled General Miguel Rodriguez Torres would lead a transitional government. The phrase being used, Madurismo without Maduro. In return, Venezuela would welcome United States investors and gradually loosen ties to Iran and Russia. Some analysts noted unexpectedly weak military resistance to the United States attacks and suggested that regime insiders may have been willing to use Maduro as a pawn in dealings with the United States. Translation: Maduro was sold out by his own people. They let the United States take him in exchange for staying in power. If true, and the circumstantial evidence is strong, this means the game is already rigged. The outcome is already decided. Maduro will be convicted. The United States will install a friendly government, and the spoils will be divided. But here's the problem. The opposition, Gonzalez and Machado, didn't get the memo. They think they're going to take power. They think they won the election. They think the people are on their side. So now you have three factions. 1. The Maduro remnants, Rodriguez, trying to cut a deal with Washington. 2. The opposition, Gonzalez and Machado, claiming democratic legitimacy. 3. The United States, which ultimately controls the chessboard. This is not a recipe for stability. This is a recipe for chaos. While oil markets debate supply and debt markets calculate restructuring scenarios, another market is sending a clear signal: the safe haven market. Gold and silver are surging. This is not speculation. This is not a technical bounce. This is institutional money, sovereign wealth funds, pension funds, billionaire family offices, moving capital out of risk assets and into hard assets that cannot be printed, cannot be defaulted on, and cannot be expropriated. Let me explain why Venezuela's collapse is driving this flight to safety. Venezuela's hyperinflation, 130,060% at its peak, was the most extreme example of currency destruction in modern history. But it wasn't unique. It was just the most visible case of a universal truth. Fiat currencies, when mismanaged, become worthless. The bolivar went from a functional currency to toilet paper in less than a decade. Venezuelans who held cash saw their life savings evaporate. Those who held gold and silver or fled with dollars survived. This lesson is now reverberating through global markets. Because if it happened in Venezuela, it can happen elsewhere. Argentina has seen similar currency collapses. Turkey, Lebanon, Zimbabwe. And now, with the United States potentially taking control of the world's largest oil reserves through military force, investors are asking a terrifying question. If property rights can be voided in Venezuela, where are they safe? But the safe haven surge isn't just about currency. It's about geopolitical risk. China is watching 600,000 barrels per day of oil slip from its grasp. Russia is watching its Latin American ally get crushed by United States military power. Iran, which had close ties to Maduro, is watching the United States tighten its noose around oil-producing nations that defy Washington. This is not stabilization. This is escalation. Sky News reported, investors rush for safe havens after Trump Venezuela strike. The headline says it all. This isn't about Venezuela. It's about what Venezuela represents. The willingness of the United States to use military force to reshape global energy markets. If Trump can do this in Venezuela, can he do it in Iran? In Nigeria? In any oil-producing nation that doesn't comply with United States demands? The answer is maybe, and that maybe is enough to send gold higher. There's a third factor driving safe haven demand: debt contagion. Venezuela's $150 billion in defaulted debt is now in play. Vulture funds are circling. Arbitration winners are sharpening their knives. China and Russia are demanding repayment. But here's the question that's keeping fixed-income analysts awake at night. What happens if Venezuela's restructuring sets a precedent? What if distressed debt investors, seeing a massive payday from Venezuelan bonds, start buying up the defaulted debt of other nations? Argentina, Lebanon, Zambia, Sri Lanka. What if the Venezuela model becomes the template? Let a country collapse, wait for regime change, buy the debt for pennies, collect billions in restructuring. This would fundamentally change how sovereign debt markets work. It would incentivize default. It would incentivize instability. Because if creditors know they can get paid through regime change and Western backing, they'll stop negotiating. They'll just wait for the government to fall. That's not a financial market. That's a geopolitical weapon. And investors who understand this are moving capital into assets that sit outside the system. Gold, silver, hard assets that cannot be restructured or negotiated away. Here's the bottom line. Venezuela's collapse is accelerating a trend that was already underway: the de-dollarization and definancialization of wealth. Institutional investors are quietly shifting 2 to 5% of portfolios into physical precious metals. Central banks, especially in Asia and the Middle East, are buying gold at record rates. Why? Because the Venezuela crisis has exposed 3 uncomfortable truths. 1. Currency can become worthless overnight. 2. Property rights can be violated by force. 3. Sovereign debt can be weaponized. If you're a wealth manager in Singapore or Dubai or Zurich, and you're watching the United States capture a foreign president and prepare to seize $150 billion in debt obligations, you're asking yourself, is my wealth safe? And the answer, increasingly, is only if it's in hard assets. Only if it's in gold, silver, land, energy, resources that cannot be printed, cannot be digitized, cannot be expropriated with the stroke of a pen. And that's exactly what's happening right now. Now let's talk about the elephant in the room. The question everyone is dancing around, but no one wants to answer directly. Who is going to pay for Venezuela's reconstruction? Because here's the brutal math. Venezuela needs $110 billion in infrastructure investment and more than a decade to rebuild its oil industry. But Venezuela is bankrupt. The country has no money. Gross domestic product per capita is $3,000, outside the global top 100. So, where does $110 billion come from? The optimistic scenario goes like this. ExxonMobil, Chevron, BP, Shell, the Western oil majors flood into Venezuela once sanctions are lifted. They bring capital, technology, and management expertise. They rebuild PDVSA from the ground up. In exchange, they get production sharing agreements and long-term contracts. Trump himself has suggested this model, saying the United States is taking control of Venezuela's oil reserves. CNN reported, a United States-led revamp could eventually make Venezuela a much bigger supplier of oil and create opportunities for Western oil companies. Chevron is already there, operating under a specific United States license. They've been producing oil in Venezuela even during the sanctions era, under carefully negotiated terms. So the infrastructure exists for Western capital to flow in. But here's the problem. $110 billion is an enormous investment, and oil companies are not charities. They will demand ironclad legal protections, massive profit shares, and guarantees that the Venezuelan government won't expropriate their assets in 10 years. Given that Venezuela expropriated ConocoPhillips, ExxonMobil, and others in the past, why would they trust a new Venezuelan government? The answer, they won't, unless the United States government provides guarantees, political risk insurance, military protection. In other words, unless Venezuela becomes a de facto United States protectorate. The second option, the International Monetary Fund, World Bank, and Inter-American Development Bank step in with massive loans. This is the responsible reconstruction model. Venezuela gets $50 to $100 billion in loans at favorable rates. In exchange, Venezuela implements structural reforms, fiscal discipline, privatization, anti-corruption measures. The problem, Venezuela already owes $150 billion. You can't solve a debt crisis by adding more debt, unless the existing debt is wiped out first. Which brings us back to the restructuring nightmare we discussed earlier. Someone has to take a loss. Bondholders, China, Russia, arbitration winners. Somebody has to accept pennies on the dollar so Venezuela can access new credit. But who? And how do you force them to accept losses when they have legal claims worth tens of billions? Here's the scenario almost no one is discussing. China doubles down. Think about it from Beijing's perspective. They already have $10 billion invested in Venezuela. They've been receiving 600,000 barrels per day. They have two choices. Choice A, walk away. Accept the $10 billion as a loss. Let the United States take control of Venezuelan oil. Watch their influence in Latin America collapse. Choice B, offer to restructure the $10 billion into a $30 billion reconstruction package. Offer to bring in Chinese engineers, Chinese equipment, Chinese technology. Rebuild Venezuela as a Belt and Road megaproject. Choice B keeps China in the game. It doubles their exposure, yes, but also doubles their leverage. And if they can position themselves as the alternative to United States control, if they can offer Venezuela a path to reconstruction without becoming a United States colony, they win massive geopolitical points. The question is, will the United States allow it? Because this is the real battle. Not for Venezuela's oil, but for Venezuela's future. Is Venezuela going to become a United States satellite or a Chinese partner, or something in between? The answer will determine not just Venezuela's fate, but the future of Latin America for the next 50 years. But here's what I actually think will happen. None of the above. I think Venezuela will limp along in a zombie state for years. Oil production will creep up slowly, maybe hitting 1.2 or 1.3 million barrels per day by 2028. But the full reconstruction, the return at 2.5 or 3 million barrels per day, will take 15 years, not 10. And it will cost closer to $150 billion than $110 billion. Why? Because rebuilding a failed state is harder than everyone thinks. The engineers are gone. The institutions are corrupted. The rule of law is shattered. You can't just inject capital and expect transformation. Asia Times put it perfectly. Venezuela is akin to a failed state. Its years of economic collapse limit broader market impacts. Translation: don't hold your breath waiting for Venezuelan oil to save the world. It's not coming. Not in the quantities promised. Not in the time frame advertised. We are now less than 24 hours from Maduro's court appearance. Let me walk you through the three most likely scenarios for what happens next. Scenario 1. The clean transition. Probability, 15%. In this scenario, everything goes smoothly. Maduro pleads guilty to avoid a lengthy trial. The opposition, Gonzales and Machado, negotiate a power-sharing agreement with the Rodriguez faction. The United States blesses the arrangement. A transitional government is formed. Within 30 days, the new government announces a comprehensive debt restructuring plan. Bondholders get 25 cents on the dollar. China and Russia get preferred status on future oil shipments. Arbitration winners get partial payment over 10 years. Within 60 days, major oil companies sign production sharing agreements. Capital starts flowing. Oil production begins climbing toward 1.5 million barrels per day by 2028. Markets love this scenario. Oil prices fall 3 to 4% on expectations of increased supply. Venezuelan bonds rally 200 to 300%. Gold and silver pull back as geopolitical risk subsides. Probability, 15%. Why so low? Because this requires everyone to cooperate. And cooperation is rare in a $150 billion feeding frenzy. Scenario 2. The power struggle. Probability, 60%. This is the most likely scenario. Maduro refuses to cooperate with United States prosecutors. His legal team drags out the trial for months, maybe years. Meanwhile, in Venezuela, the Rodriguez faction and the Gonzales Machado opposition both claim to be the legitimate government. Neither recognizes the other. International recognition is split. China and Russia back Rodriguez. The United States and European Union back Gonzales. Chaos ensues. Contracts can't be signed because no one knows who has authority. Debt restructuring stalls because creditors don't know who to negotiate with. Oil production stagnates at 900,000 to 1 million barrels per day for years. Market impact, prolonged uncertainty. Oil prices remain range-bound. Venezuelan bonds remain distressed, trading at 5 to 10 cents on the dollar. Gold and silver stay bid as Venezuela becomes a permanent low-grade crisis. Probability, 60%. This is the messy middle. Not catastrophic, but not clean. Just broken. Scenario 3. The Venezuela-China axis. Probability, 25%. The dark horse scenario. China makes an aggressive move. Beijing offers Venezuela a comprehensive bailout, $30 billion in immediate reconstruction funding, plus technology transfer, plus debt relief on the existing $10 billion. In exchange, China gets 20-year exclusive contracts on 70% of Venezuelan oil exports. The Rodriguez government, desperate for legitimacy and capital, accepts. They frame it as resistance to American imperialism. Russia throws its support behind the deal. The United States is furious but trapped. They can't invade Venezuela again. Maduro is already in custody. They achieved their primary objective, removing Maduro, but lost the larger prize, control of Venezuelan oil. Market impact. Massive geopolitical shockwave. Oil prices spike 5 to 7% as traders realize Venezuelan oil is going to China, not Western markets. Gold and silver surge on escalating United States-China tensions. The dollar weakens as petrodollar dominance is challenged. Probability, 25%. This is the nightmare scenario for Washington. And precisely because it's the nightmare, China has enormous leverage to threaten it, even if they don't execute. We are watching the final act of a decades-long tragedy. Venezuela, a nation that should have been one of the wealthiest on earth, destroyed itself through corruption, mismanagement, and the arrogance of believing that oil reserves alone equal prosperity. But the tragedy isn't over, because now comes the feeding frenzy. $150 billion in debt, 303 billion barrels of oil reserves, $110 billion in reconstruction needs. China, Russia, and the United States in a three-way battle for control. This is not about democracy versus dictatorship. This is not about human rights or the rule of law. This is about money. This is about power. This is about who controls the energy future of the Western Hemisphere for the next 50 years. Who wins in this scenario? The distressed debt investors. The vulture funds who bought Venezuelan bonds for 5 cents and will collect 25 to 30 cents in restructuring. That's a 500% return. The arbitration winners. ConocoPhillips, Crystalex, and others who have legal claims worth billions and the power to seize assets anywhere in the world. The oil majors. ExxonMobil, Chevron, Shell. If they can get security guarantees, they'll make fortunes rebuilding Venezuelan production and taking 30 to 40% profit shares on every barrel. The geopolitical powers. Whichever nation, United States or China, secures long-term control over Venezuelan oil exports wins enormous strategic leverage. And who loses? The Venezuelan people, 90% of whom live in poverty, who have watched their life savings evaporate, their country collapse, and 7.7 million of their fellow citizens flee. They will see oil production recover eventually, but the profits will flow to foreign investors, not to them. China and Russia. If they get muscled out by United States power, they lose $20 to $25 billion in loans and massive geopolitical prestige. The bondholders who held on. Anyone who didn't sell their Venezuelan bonds to vulture funds will get pennies on the dollar in restructuring. The opportunity to exit at 10 to 15 cents is gone. Now, they'll get 25 cents if they're lucky. Traditional oil producers. Saudi Arabia, Russia, OPEC nations. If Venezuela brings 2 million barrels per day back online, oil prices fall 4%. That's billions in lost revenue for every producing nation. But the real lesson of Venezuela goes beyond winners and losers. The real lesson is this. Nations that control hard assets, oil, gold, rare earth minerals have power. Nations that print paper currency and hope the world accepts it are vulnerable. Venezuela printed money and destroyed its currency. The result? Economic suicide. The United States prints money and the world still accepts dollars. For now. But for how long? Because if the United States can seize a foreign president, declare his government illegitimate, and restructure $150 billion in debt by force, what does that say about the rule of law? What does it say about contracts? What does it say about property rights? If you're an investor in Shanghai or Dubai or Zurich, watching the United States take military control of the world's largest oil reserves, you're asking yourself, is my wealth safe? And the answer, increasingly, is only if it's in hard assets. Only if it's in gold, silver, land, energy, resources that cannot be printed, cannot be digitized, cannot be expropriated with the stroke of a pen. It is now 18 hours until Maduro stands before a federal judge in Manhattan. 18 hours until the legal machinery of the United States begins to grind. 18 hours until the battle for Venezuela's $150 billion in debt and 303 billion barrels of oil officially begins. The countdown is almost over. The wealth transfer has begun. Here's my advice to you. Don't watch the headlines. Don't watch the mainstream narrative. Watch the money. Watch where the distressed debt traders are putting capital. Watch where China is moving oil tankers. Watch where gold and silver are flowing. Because in the next 36 hours, fortunes will be made and lost. Nations will rise and fall. And the global economic order will shift in ways that won't be fully understood for years. You've been warned. You've been educated. You've seen the mathematics. Now the question is, what are you going to do about it? The Venezuela crisis isn't ending. It's beginning. Stay vigilant. Stay informed. And stay positioned in hard assets that cannot be printed, cannot be seized, and cannot vanish in hyperinflation. I'll see you on the other side of tomorrow's gavel strike.